Good morning, America. Welcome to Taxes Made Easy. We've got an interesting show today, talking all about estimated tax payments. Now, I've covered this topic before, but why am I talking about it today? Because we only have a couple weeks before the next tax deadline. And if you miss this, again, there'll be another penalty for failing to pay sufficient estimated tax payments. So we're going to take a deep dive into this to help prepare people not only to prepare for this tax deadline coming up, but try to avoid these penalties, and it'll help you manage your financial situation better if you're self-employed or if you have your own business or if you just have a side gig going. So this is something that's going to help people make sure that avoid some penalties, avoid some issues here. And a lot of people are going to be surprised because the penalty increased dramatically this year. So stay tuned, and we'll be right back after this break. Welcome back, everybody. Thank you for watching live or on rebroadcast here at Taxes Made Easy. Again, Hubert Johnson with Guardian Tax Law hosting the show. So got a bunch of interesting news, and I think mainly, as the host of the show, I want to make sure that people are informed. And so one of the issues out there, there's been some neat issues, but a lot of great plans have been thrown out about EVs, about other projects that we want to do. But it's kind of funny. There's a cartoon show called Meet the Robinsons where the bad guy in the movie, or the lackey, comes up with these great ideas, but he doesn't think it through. And half the time that's our government. So I want to just share this article as we walk through it, talking about one of the biggest things facing electric vehicles and expanding and improving our electric grid, which needs to happen. But a new study coming out, the amount of copper needed to hit these goals and these mandates being thrown out is just, it's unrealistic. There's no way, given our current and projected increase in copper production. So, and the world is not adding copper mines, and you can't just build copper mines. You have to find the source, you have to investigate it. It takes years to bring copper production into place. In the United States, here in Arizona, copper is big, and it's fought at every single turn every time they try to create or expand a new mine. It is very, very difficult to bring on new copper production, and ironically, that's going to hurt electric vehicles. So this is cited by Breitbart, but the study comes from Engineering and Technology, and so the University of Michigan did the study called Copper Mining and Vehicle Electrification. So basically, there's not enough copper. There's not enough copper being mined, and it's not a little bit. You would need to double world production of copper. Currently, there's 709 operational copper mines, the largest being in Chile, the Escondida mine. If you haven't heard of that, it is the largest copper mine in the world. And so it's producing, the largest ever, that has a huge output, but it can't keep up. So an electric vehicle requires 3 to 5 times more copper than traditional gas or diesel vehicles because everything is electric. The battery, all the components require lots of copper. So a normal Honda Accord needs about 40 pounds of copper. So an electric Honda Accord needs almost 200 pounds of copper. So that's 5 times more. And for every single vehicle, especially if you're mandating increases in, that more and more vehicles be electric, that just compounds the problem. So they went back, looked at 120 years of global data on copper production. Um, so to achieve the goals and the mandates being put out, you would have to increase production by 115% more copper, not just by current production, 100%, 115% more copper that has been mined in all of human history up until 2018. I mean, copper hasn't been mined in the numbers it is today, but it's been mined since the beginning of time, really. The Bronze Age, copper was one of the key ingredients to bronze weapons. Copper and tin. Um, and they're saying to do that, you would have to have 6 new large copper mines brought online annually over the next several decades. And then 40% of that would have to be just for EV related grid updates. So again, it's just when too often things are done for political purposes instead of sitting back and saying what makes sense. What makes sense for our economy, for our companies. Everybody's racing to be number one in EV marketing, and when the technology is there, I fully support it. But when you have the government shoving stuff down our throats, it's usually not thought out, it's usually not planned out. And these are the results. So, we're mandating this, we're forcing this, but the production of copper isn't there, the infrastructure isn't there. There's, instead of doing things incrementally over time, trying to force things is going to be a huge problem. Now, one thing the article does suggest is hybrid vehicles might be a much better, or a much more feasible solution. Comparing a Toyota Prius has actually a better impact, slightly better impact on the climate than a Tesla. And that doesn't include all the mining and nastiness that comes with producing an EV. They're saying, look, if we built a 20 million hybrid vehicles, we would avoid a lot of this issue, and they can be more efficient. So again, instead of taking a look at all technology and new technologies that might come out, again, heavy-handed government approaches usually do not work. So this is going to play right into the next article that I'm going to share. And it's actually kind of interesting, and this is me just trying to look. Let's just throw the information out there. Former President Trump went and spoke to the Libertarian Party convention as they're trying to choose their candidate for president. Now, by and large, I think the Libertarian Party in the article says they got 1.6% of the vote. You've read this article, another one that I read. So Robert F. Kennedy came and spoke to them, as well as former Republican President Donald Trump. But they chose Chase Oliver. And interesting enough, the headline says, he's, pro-trans. I do appreciate when someone is consistent with their ideology. So what they stand and what they argue for is applied consistently. Do I agree with everything that the Libertarian Party supports? No. But it does appeal generally because it's generally smaller government, less influence. So Chase Oliver here is their presidential candidate, and I do think third parties might not be the way in American politics, but I think ignoring them, shutting them out is undemocratic, and too often both parties can do that. So just wanted to touch on his, the main thing there. They're saying, look, we want to fix the broken two-party system, and some of their, so he's ridiculed as being a former Barack Obama campaign supporter. He was a former Democrat, but at the same time, he left the Democrats to find an anti-war party, a true anti-war party. I can sympathize with that. Why? Because too often you get the Democrats and Republicans, and it's the same side of the coin. There's no real choice between them. There's people pushing for wars on both sides, or we're supporting both sides of the war. I mean, we're funding the Palestinians now and the Israelis. It's just like, what? Doesn't make much sense. And so basically, he's saying we need to get the government out of foreign wars. We need to get it out of decisions. And with medical issues, he supports autonomy from the government in making personal decisions. So people can make their own decisions regarding healthcare, including trans, abortion, etc. Now, you might agree with that, but at least he's consistent. So, and the platform includes ending involvement in and funding of foreign wars or wars, an Ellis Island approach to immigration, which means essentially open borders, except for people with a criminal record. So, getting rid of gun control laws, abolishing the Patriot Act and FISA amendments, and lessening government involvement in the economy. So some of these I can stand behind, some of these I can't. It's just like a broad brush. We need to get the government out of, reduce the role and size of government. But I think the government does serve valid purposes. And I think there's a lot of consequences that are poorly considered in taking such a broad brush approach. But I do think it's important that we do talk about other options besides the main parties out there. The next tab, this one I think is pretty interesting. This is a Wall Street Journal article talking about California. They love increasing minimum wages. They raised it to $20 an hour for fast food workers. And I think it's interesting that they're doing it piecemeal, one industry at a time, which you would think would make a bigger mess of things. It makes it harder for businesses to anticipate and prepare for what's coming. And you want to talk about big increases. Excuse me. So the article, I'm not going to spend a lot of time on it because we're actually running. Oh, I've got 30 seconds left. So here, this is not, rarely think twice. Progressives in Sacramento rarely think twice before burning businesses. However, they passed a 25 an hour minimum wage for healthcare workers. But the problem is they're scrambling to stop it, what they just passed. And I'm going to have to cover this when we come back because I'm running out of time. But we'll dive into this and move forward when we come back from the break. Welcome back, everybody, to Taxes Made Easy. Just wrapping up this article regarding the minimum wage increase for healthcare workers here in California. And so just to cover this fairly quickly and move on, they passed this increased $25 an hour minimum wage for healthcare workers, but now they're trying to reverse it. So they're scrambling to put a delay on it. It's supposed to take effect on June 1st. So while politicians often reverse themselves, why are they reversing themselves so quickly on this issue? It all has to do with the state budget deficit, because this doesn't just affect private employers; it affects all healthcare workers throughout the state. So this is going to cost the California government $4 billion more when they already have a huge deficit of $45 billion. So they're balking at this and saying, "Look, yes, we passed this, but we can't afford this." So ironically, they're saying they can't afford this, but at the same time, there's very little concern that private companies can afford this huge increase in costs. And the thing is, what the true cost just gets passed on to consumers, which is the sad part here. It makes healthcare more and more unaffordable just by artificially increasing minimum wages across the economy. Now, interesting article talking about this, and this is from Just the News. And this is just based on a recent study from the Pew Charitable Trust. State tax revenue outperformed in 32 states, underperformed in 18 states. So that's really what the news is about. And I looked at this at first and I said, well, why are they focusing on the negative? Well, because the last time they looked at this, only 4 states were underreporting. California reporting the lowest. Part of that is just, they extended people's time to file their personal returns, but again, 32 states are essentially on track, meeting or beating their projections. Alaska beat their projections by 11 times. Part of it is heavily dependent on oil. It really depends on the price of oil. So it really fluctuates up and down. You have your Wyoming, New Mexico, West Virginia, and Montana. And then so they take things and they look at a 15-year trend level to look at these numbers and determine who's on track, who's not on track. The one struggling the most, California, followed by Minnesota, New York, and Connecticut. And then they mentioned that their underperformance is partially attributable to recent delay in income tax filing deadline for state residents, which pushed it out from April to November. But again, California is having a lot of fiscal issues. They've got another big budget hole that they're trying to fix. So much so that they're reversing some of their laws at the last minute because it's just costing the state too much, especially with the minimum wage. So it was only 4 that were underperforming in the previous quarter, and that jumped to 18. So there's a lot of states struggling with tax revenues, and then property, state taxes, and it kind of goes into it a little bit more. I just wanted to touch on this. Tax revenue remains strong in the 2 largest states, Texas and Florida, that ironically don't have any income tax. So that's going to lead us to our next article. Having high income taxes or any high income taxes can be counterproductive. And I've talked about this a lot, about how even though people try to redistribute income and go after people's taxes, it can be counterproductive. And I think politicians, being very short-sighted, not thinking things through, not, just when I say that, it's kind of funny because this guy comes up. If you haven't seen the movie Meet the Robinsons, it's weird, but it's actually a pretty cool movie that actually touches back to some of Walt Disney's original ideas. But thinking things through, planning things out is not what politicians are good for. They do what feels good in the moment too often without having a good plan. So this study actually came from University of Riverside, UC Riverside, and looks at 110 years of income tax history and how that affected out migration by wealthy Americans. So it looks like a fairly thorough study done over time, and co-authored by Hugo Troiano. I'm sure I butchered that. It looks at pre-World War II and post-World War II personal income tax impacts. So when we raise personal income tax levels, you have higher tax states. What does that do to overall tax revenues? Pardon me. I could spend way too much time on this article breaking this down. The main takeaways here is, so this study from 1900 to 2010, and as states increased their revenue by 12 to 17%, ironically, it did not correspond to an increase in total revenues by the state governments. And we see this time and time again. We had the Trump tax cuts and revenues went up. Why would they go up? Because people actually increase production. When you cut taxes, people go out and do more, and the pie grows, GDP grows. As a result, taxes increased. But more often than not, when you increase taxes, then you shrink the pie. People are less productive. There's less money flowing through the economy because the government's taking it. And by definition, the government is not efficient. People usually are a lot more efficient, in an economic sense with their money than the government is. The government's known for waste and abuse, and usually when they take that money out, this flies in the face of Keynesian thought. Keynesian economists will argue that the government spending is always good. The more it takes, the more it spends, the better it is for everybody. But usually it benefits the connected. Cronyism and fraud and waste and abuse is rife. So instead of flowing through the economy through free trade, it usually goes to a select few. So going on back to the article, so the introduction of income taxes in the post-World War II era led to outmigration by wealthy Americans to better tax havens, more reasonable places to live. So the idea is you tax labor income, you tax the wealthy to provide services to poorer parts of the population and reduce inequality. But as a result, when you do this often, you get less tax revenues, you have less available, and then the wealthy Americans just move somewhere else. It's very easy to be highly mobile in the United States because there's no language barriers across the country. It's just so much easier to just move from state to state than it is from country to country. But there are people that, especially among the super wealthy, they have other countries, they have houses elsewhere. And so it kind of breaks it down. If you have more questions, go to the original article. But this idea that that there's a direct link between increasing state taxes and people leaving the state. It just makes sense. The more you tax people, the more they're going to live. And then this goes to Massachusetts trying to pass this billionaire tax or mansion tax to go after the wealthiest, and they have this short-term boost of income. Los Angeles passed a very similar law, going after the ultra-wealthy. And guess what? Their market has been killed, and nobody's buying and selling. Everybody's holding on, and hopefully they repeal this law. But people that can are leaving, and the more that they crack down on the wealthy, the sooner they're going to leave. So, last article here before you, and I'll make this one short. This is from The Guardian, another example of people fleeing higher taxes. So in the United Kingdom, they got rid of this huge benefit for overseas income. So people that are, the super rich that aren't citizens, or they have dual citizenship, they're leaving. Some jumped on a private plane, grabbed their family, grabbed their private tutor for their kids, and left. They're not stuck in a school system. They're not stuck to one house, etc. So it just kind of goes through this example of one billionaire client. Literally on the day of the budget, load everything up and said, "I'm not coming back. Bye. I have 17 other houses across the world. Don't need to be here." So when they leave, that actually hurts the countries that are trying to raise funds and taxes to support their social programs. But there's always a limit of what people will take. And there's other countries that are inviting them. In Italy, pass special laws to give them tax treatment. Come here and bring all your money, spend your money here in Italy, because they know it will help the country. So the idea that we're going to attack the super rich and it's going to benefit everybody usually is counterproductive. And so they talk about quite a few others that are doing the same thing. Senior tax advisors are advising their clients, and that's their job, is to advise people to leave. Not everybody's leaving, of course, but it's enough that it probably is going to be counterproductive and hurt this whole program. So I mean, if you want to raise more funds, if you want to increase funding for the poor, just targeting the rich usually blows up in your face. Politically, it's the easiest to do because there's fewer rich voting, but it absolutely blows up. It can blow up in your face. Now, the topic for the day is I think, I've talked about it quite a bit, and I actually was yesterday, Memorial Day, had some friends over, and we got on the topic of estimated taxes. So estimated tax payments are something I've been trying to focus on a lot. I know I've talked about a lot on the show already, but we've got another deadline coming up. June 17th, because June 15th falls on a Saturday, I believe. Yeah, and so whenever you have a deadline, IRS deadline, it falls on a weekend, it's always the next Monday is the deadline. So June 17th is the deadline to make your second quarter estimated tax payment. So So I want to kind of go through what are estimated tax payments, what needs to be paid. So again, we were having this conversation, and one of the gentlemen I was talking to has side work, 1099 work on top of his normal income, and he's a law enforcement. And this is very, very typical of law enforcement, is that they'll work elsewhere to get paid fairly well and provide security for events, for different venues, for different retailers, etc. But they get paid a 1099. This is considered a side job. You are working, so you have your W-2 pay and you have your taxes withheld from that, but you have to be considering this side job and paying taxes throughout the year. So when are taxes due? When do you need to pay your taxes? Too often I ask that question, and the response is, you have to pay by April 15th, right? No, that's when you get hit with more penalties. But the failure to make estimated tax payments, there's always been a penalty there. It just hasn't been that big of a penalty. November 2023, again, Congress passed a new, increased the penalty to 8%, which is the current rate of interest. And if you're holding your breath for interest to go down, don't. I've talked to a few people that they're like, fingers crossed interest rates will go down. All the indications in the economy that it will probably, it might even go up. There are, the Federal Reserve presidents are actually talking about maybe increasing due to continued negative, numbers about the economy. So prepare for the long haul. Don't expect things are going to change in the short term. It's very possible they won't. So whenever you get additional income that is not taxed, you need to pay an estimated tax payment on it. So some of the examples are you get paid interest, dividends, alimony, self-employment income, capital gains, prizes, and awards. These are all, anytime you get a chunk of money, even if you take the money out of a 401k, well, especially if you take it out of a 401k, you're going to get taxed on that. So they will frequently take taxes out when you take money out of a 401k or an IRA or something like that. It's often not enough. And it also can put you into a higher tax bracket. So overall, you get taxed more. So always a concern here. So understanding how estimated tax payments work can absolutely save you money. So just going through this article here, who must pay estimated tax payments? If you expect to owe $1,000 in taxes or more. So if you have any kind of, if you just have a little bit of income, you don't have to pay estimated tax payments throughout the year. However, if you're gonna owe $1,000 or more, you really do need to. So if you have a side job, you probably don't have to worry about too much if you're just bringing in, a few hundred every month. But if you're bringing 1,000 or more every month, you're probably going to have to pay taxes on it, or you're going to get hit with this penalty. This increased penalty is going to surprise a lot of people, and you have to pay for the current year if your tax is more than zero. So there are some exceptions here. This is a fairly narrow exception. So if you didn't have any tax liability for the prior year, so you didn't have any taxes due, if you're a U.S. citizen and the prior tax year covered the whole 12-month period. So I wouldn't risk it. And the IRS has plenty of tools here. I've mentioned the tax withholding estimator. You can go through this and plug in some numbers. You should talk to a CPA. If you have a side business, especially if you have business expenses, you should be crunching these numbers. And it talks about how to fill it out. There's a 1040 ES. I just emailed this to my friend yesterday. Here's the form. Here's the vouchers for 2024, and it has the specific dates. There's 4 payment periods. It is not every 3 quarters. So the first quarter covered January, February, March. Payment was due on April. Second quarter only covered April and May, and it's due June 15th. Don't ask me why it's covered. Third quarter covers June, July, and August, so another 3-month period, and it's due on September 15th. And then the last 4 months are included in the fourth quarter due January 15th of the next year. So how do you keep track of this? One of the best ways to do this, this tells you there's a bunch of different ways. You can pay IRS to Go app. You can pay through your irs.gov account. You can mail in a check. You can print out the 1040 ES and send it in with vouchers. You want to make sure, and we just hit a break, so we're going to cover this when we come back. Welcome back, everybody. So trying to really hammer home on estimated tax payments and the importance for it. And I was saying something really important, that when you make your payments, especially if you owe other tax liabilities, you have to designate where the payments are going to. So estimated payments need to be you should put first quarter, second quarter, third quarter, whatever you're paying, and the year, the tax year. And this hurts a lot of people, especially if you have other tax liabilities. The IRS will if you don't designate it, they'll put it where they want to towards other tax liabilities instead of the current tax year. And this is so important because you get hit with a lot more penalties and interest if it doesn't get applied to the right tax period. So be very mindful of that when you send a payment, if you do it by check, you can put it in the memo. You should include a voucher. Again, just 1040 ES. You can download it from irs.gov. And all you have to do is go to irs.gov and search up 1040 ES. It'll come right up. And then you can get that payment in, make sure it's applied to the right period. I've seen cases where people misapplied it, or the IRS got it, didn't know where to put it, and it got stuck under another tax period. So you make the payment, the IRS has it, but it gets applied under a different tax period and it's just sitting there. And then you start getting into penalties for the tax year you're in instead of just having the funds moved around and applied to the correct tax periods. So just be aware of that when you make that payments. Make sure it's done correctly. If you have questions, give us a call, 520-485-7371, or reach out to your local tax preparer or CPA. They can help you as well. These are pretty simple things for the CPAs. And generally, if you owe less than $1,000 in tax, you normally don't have to pay estimated tax payments. Or if you pay at least 90% of the tax for the current year, or 100% of the tax for the prior year, whichever is smaller, the IRS will leave you alone. So if your income goes down, you don't have to pay what your numbers were for the prior year, but the problem is if most people don't know that. So I've talked about this before, where larger corporations, larger businesses, they have teams of accounts. They look at their numbers. They can make financial decisions a lot quicker because they have regular reporting. They get regular numbers, usually monthly, if not quarterly. It helps small businesses owners to know what's going on with their taxes. And it should absolutely help people to know what's happening with their financial situation, and to budget by knowing what has actually come in. What is your income coming in? What should you actually pay taxes on? So and I've been talking to CPAs, I've been talking to tax professionals about this, that when you do file, when you are filing quarterly tax payments, you can guesstimate based on the previous year, or even better, get more connected with your CPA, talk to them more often, and do quarterly profit and loss statements. There are plenty of reasons to do this. First of all, it helps you plan and understand what's happening with your business, either monthly or by quarter. A lot of business owners have no clue what their income is. I did a national podcast where I was talking to someone. I asked him, well, what's your income so far? He's like, I have no idea. I'll find out. When we always do an extension, and when the person gives me the numbers, I'm like, well, you have no idea how to pay estimated tax payments, how to get a hold of that, how to make wise decisions. And I'm telling him this. He's like, oh, okay. And he's a very connected, excellent financial planner, but this is something he's not aware of. Most people aren't doing this, but it helps you prepare and plan for your business, as well as stay on top of estimated tax payments. So one thing they don't talk about, and this is what I want to jump to lastly here, the penalty. The penalty was boosted to 8% for 2024. So you will get every month that you're not paying, and this is from Forbes, every month that you're not, or quarter that you're not meeting these estimated tax payments, you are paying extra at the end of the year. So if you owe $10,000 every quarter in taxes, by the end of the year, that's $40,000 times 8%. That's $3,200 additional in taxes, on top of your normal taxes that you have to pay. So that's just your tax rate. That's on top of everything else. It's 8% penalty. So you have to pay your normal tax rate plus an 8% penalty before you, and that's going to be assessed to you when you file your taxes. So as interest rates, if they continue to go up, this is only going to get worse. So again, we've been talking about this. We've been going over this, that it used to be, and they're talking about 8% penalty for inflation. This is also specifically on tax you've not paid as of the day you file your annual return. And this can even apply if you expect to receive a refund. It can cut into refunds if you didn't pay estimated taxes throughout the year. This is what the IRS is demanding now, and they increased their standard here. And again, it talks about Who does it apply to? Contractors, freelancers, gig workers, anybody that's self-employed, has a small business, or something on the side. So my son and I, we started refereeing a few years back, and he's really enjoyed it. It gets me some out, and I get some physical activity doing it. But there are plenty of months he's making $1,000 a month. He should be paying estimated taxes on it. So, even small things like that people don't think about, especially when something does take off. So, as far as small businesses, pay attention to this. This is going to help you manage your business. It's going to help you avoid taxes. And one of the biggest things, and this is one of the biggest helps, is that most people, they just deal with the taxes when they come. They don't know what's happening throughout the year. They just deal with it. This gentleman I was talking to yesterday didn't even know what tax bracket he was in. I sat down with my CPA a couple of times throughout the year, looked at my profit and losses, estimated, okay, this is where my tax bracket, this is where I'm probably going to fall, and this is what I need to do to make sure I'm in the bracket I want to be in. This is how I can save myself thousands of dollars just by, using the IRS rules and regulations, itemizing and preparing to file my taxes in a way that's most beneficial to me. Too many people, they just file their taxes, they're not paying attention. You should be exploring ways to save money on taxes. And some of them, getting health insurance. You can get, invest in 401ks, IRAs, prepare for your future. There are plenty of tax saving strategies that you can qualify for. We missed out on one. In Arizona, they have a tax credit for donating to school programs, to charities. We do donate to charities, so we probably got it. But usually we give it to one of our kids' local schools because they've always been in different programs. But this last year, we have a middle schooler and we have a high school. And it's always gone to the high school because our kids have always been in different programs. But this year, our senior he went to an early college program. So he wasn't on the high school campus. He was in early college. And, I'm not sure we claimed this credit. It's like $350 would have gone directly to one of our school programs. So I talked to my wife. I'm like, next year, let's make sure this goes to our oldest kid in school, and it's going to go to his band program to help support them. There's plenty of ways to plan and be proactive about taxes. It'll help you feel so much more comfortable knowing where you are throughout the year, knowing what your income is so you can budget and plan for the future, and use a lot of these ways to save on taxes, to invest for your future for the benefit of you and your family. Very few people are sitting down with CPAs and saying, let's be proactive. Let's get ahead of this. Let's deal with this. And so that's a huge concern here. But again, as we do this, I think it's a very smart way to go. So one of the things that I want to focus on going through is some of these tax planning strategies, ways to save money, ways to help people. And especially for high income earners, there are plenty of ways to do that. But even for average middle America, there are plenty of ways to save on taxes, help your family out, and most people aren't aware of them. Most people aren't paying attention. So that's why if you want to improve your situation, this is a great way to save money where things are a little tighter economically, and you don't have to pay an arm and a leg just to get some good tax advice and get steered in the right direction. That's one of our principles that we run Guardian Tax Law by. So again, if you have questions, give us a call at 520-485-7371. You can go to guardiantaxlaw.com our website, and we do have links there. You can click and watch all of our older YouTube videos. And then as far as getting prepared for and making sure you're paying these estimated tax payments, it's going to save you a lot of money. It's going to give you a lot of peace. And imagine walking into tax season like a boss, knowing you're ahead. You already know what you're going to owe. There might be some final tweaks as you finalize your tax return, but you know you're not going to have a problem. And you can take advantage of tax saving strategies through investing, through charitable giving, through, and you can prepare it to either be in a better tax bracket or to support causes that are important to you. So you can have a bigger impact on your community, which again, I think is very important. There's so many worthy causes out there. Yesterday, for Memorial Day, my family, we went to a local VFW for Memorial Day, and they had a pretty amazing ceremony. It was short, only about half an hour, but they shared some key things. They had a Gold Star mother who lost her son in Iraq, and she had stepped up, and she was the president of the chapter here in Southern Arizona. And she said she worked with and reached out to Gold Star families and mothers across Arizona. How important. And these are plenty of charities that need support. They need funding. And when you plan, you can use your dollars wisely, save on taxes, and support some amazing causes out there. And I think that's a great way to be connected with other people, to feel like you're doing good in the community. And there's so many charities, very worthy charities out there, either helping veterans or kids or the disabled or women's shelters, etc. And a lot of us, someone posted the other day, Tucson doesn't do anything for Memorial Day. Just didn't know about it. And it was interesting that a lot of people posted, there are like 5 things going on Memorial Day, depending on where you were in the city. And you just had to go and find one. There's a lot of good people in our community and in communities across the country doing excellent things. And when you're on top of your taxes, you can use that to your benefit to support good causes, to support good people. And that can make you a happier person too, knowing that you're having a positive effect in your community. If you have any questions, again, feel free to call us. But that's our goal, is to get people out of this. I'm scared of the IRS. I hate the IRS. I don't understand the IRS. Taxes is a nightmare to me. If you use good tax professionals to get ahead of this, you can dominate. You can feel like you're in charge of your life. You're in charge of taxes. And then when Congress makes decisions, you can understand better how it's going to help or hurt you based on what Congress is doing. But you can prepare for it as well. And the more you prepare for it now, the better you'll be ready. And when things either get better, hopefully the economy improves, or if we get stuck in stagnation for a while, you'll be able to prepare your family for financial success in the long term, despite what's happening in the economy. So again, have a great day. Get out there and spread the word. If people haven't heard about this, this is a very important topic. I'm expecting a ton of people that are going to get hit by these penalties next year and are going to be calling me saying, what happened? Because too many don't know. Too many CPAs don't know. Or they aren't making changes to truly help people because they're so overwhelmed with their business as it is. So have a great day. Reach out and do some good out there, people. And great luck getting ahead of your taxes.